Hi Gopi, this is Riddhi with Prospect Mortgage. We talked in the morning and I'm sending you the spreadsheet. I usually do this for the clients so that they can get an idea as to what they're looking for in payments and how, and I also make recommendations as to how I think the loan should be structured. So this is based on some of the topics that we discussed and some of the assumptions I made. So the first assumption are the things that you told me. Your purchase price for the property is going to be somewhere between 500 to 600. So what I did was, and you were interested in a 30-year and a 7/1 arm. I'm also going to send you another one tomorrow for 10/1 arm. But if you look at, there are four columns here, and it starts at 550,000 with 30-year fixed loan, 550,000 doing two loans as I was suggesting, and 575 two loans for 30 years, and the last option is 600,000 with two loans with 7/1 arm. So let me walk you through this. So if you're buying the $550,000 home, and I'm just showing it at 30-year fixed, I'll send you the other spreadsheets also with different interest rates so you can see them. I chose because we're only doing one loan, and we are getting a rate of 4.375. We are going all the way to the maximum loan amount of 417,000. That is the conventional loan amount that's available under Fannie, Freddie, and conventional loan products. If you were to borrow more than 417, you'll go into the jumbo category, and as we discussed, that will be half a point to three-quarters of a point higher than what you could get on a conventional mortgage. Since you are so close to 417 for the amount you need, my suggestion would be, if you're around 550 range or so, you can come up with the extra funds if you have access to that. If not, I can show you how to do that. So 417,000, one loan, 4.375, 30 years amortized. Our payment is $2,082. No mortgage insurance. Your total payment is so 2082, does not include your taxes and insurance. I'll show you that on the next page. This is just the principal and interest, because taxes are whatever they are. It is not going to be something that you're going to shop for. They're a function of the property. So I'm going to assume your tax benefit is $638. I'm just showing it to you. It has no other bearing except that I'm estimating that for you. Obviously it's going to depend a lot on how tax your income tax is structured. So I'll leave that just for information purposes. Your total cash to close is 133,000. Does not include your closing costs, so keep in mind the reason I'm not including the closing costs, like we discussed, we pay our real estate taxes and RARES, and since you're buying a property of that size, you would get probably 5 or 6 months of taxes back from the seller, and you will be able to use part of it from towards your closing costs. And sometimes people get closing costs or they get home inspection credits. So I'm just talking about what we need for down payment. If you want to have a number in your mind for closing costs, I would say for a house that size, buying in Naperville, because you have tax stamps and title insurance and whatnot, think of it 5,000 is a good number to have in your mind. Okay, now let's move over to the second column. Now we are buying 550,000 with two loans if we don't want to come up with 133,000. As you had mentioned, you're looking to put down somewhere between 100 and 120,000. So the loan amount, again, the max we can go is 417 on the first. Leave it there. You again doing a 30-year product, 4.375. I want to caution you, even though I use 4.3, keep in mind it's going to be a little bit higher. Like we discussed, that the interest rate if you do two loans is going to be a little bit higher on the first, because it is a riskier product for the banks, from the bank's point of view. So your payment is 2082, just like this one, but then we have a second for 27,500, and it's a 5.24. It is a variable interest tied to the prime. It can change as many times as the prime changes. At this point it is at 5.24%. They even though they give you a 30-year, it's not really a 30-year plan, but they will have what is called line for 30 years, and then it is a balloon in 15. That's how what they call it. Your payment that is expected of you is only interest only payment. You can always pay more, but that's what they expect of you when you're making your payments. For underwriting purposes, they're going to calculate it based on 15 years. I did not go into your salary, so I'm assuming you're going to be okay on the ratios, because most Indian people, from what I know from the clients that I deal with, tend to buy less than what they really can afford. We are very conservative people, so I'm not going to worry about that at this point. So your total payment for 550,000 with two loans comes to 2,234. The reason it's higher, keep in mind, over here you're putting 133,000 down. Over here you're only putting 105,500, which is a good deal. Let's say if you needed the funds, which are almost 28,000, if you're buying a car, your car payment would be much higher. So great deal. Now it becomes a better deal if you go into a not a better deal, but a better decision, in my opinion, if you're buying a more expensive house. So 575 if you do two loans, 417 again. The rate is 4.5. Payment 2,113. The second loan amount is 38,000. Rate 5.24. Our total payment comes to 2,322. And the total cash to close on that is 120,000. You had mentioned 120 is something that you're thinking of, so I tried to keep it at that. If you were to buy a house for 600,000 under 7/1 arm, the reason I took that and compared it to a 30-year, because I wanted to show you, even though you're buying a bigger house, by doing a 7/1 arm, your payment is still cheaper. So 417 first loan, the 7/1 arm rate that I can get today with two loans is 3.375. Might be better. Again, it depends on the factors that we discussed, your credit profile, your debt to income ratio, and again, if you're doing one loan, two loans, all those things, and how long do we need the loan to be locked at. Your payment is 1,844, obviously much cheaper here. This is $65,000 loan because now we are borrowing more. Your payment goes to 359, and your payment still between these two, it's pretty similar to this. Actually, it's cheaper. Buying a $50,000 more home, only paying as little as 550 by doing 7/1 arm. This is a 60-month analysis. It shows what is going to happen if you were to keep this loan for 5 years. So this is where the bigger difference comes. So total payment on a 30-year fixed on 550, one loan only, you would have made 124,000, and you would have paid 37,597 towards your principal. On 550,000, two loans, obviously higher loan amount, because we are not putting down 130, we only putting 105. You would have paid $39,759 because now you're borrowing more, so and we are starting with more, you pay off more. On 575, 139,349, you would have paid 39,859, not a whole lot more. Pretty similar, your balance would be 415. On 600, by doing the 7/1 arm, see, your total payment is 132, but you would have paid a lot more towards your principal because the amount of interest that's being charged is less. So when you start at a lower rate, more money goes towards your principal. So 48,833. Your balance left is 433,117, and in my opinion, yes, that's a good deal. But again, you have to decide what is comfortable for you. We did not do anything, ignore this part, because I did not use any term reduction. I did not know if you're looking to pay off at a fast pace, so I have left that alone. Now let me show you the total PITI, what we were talking about. Again, it talks about the program details, 30-year fixed, no second mortgage, first and a second here, first and a second here, first and a second here. Now we come to the property taxes and all that. Hazard insurance, I'm assuming, is at $65 for first property. You can pick any insurance company that you want to. I'm just making assumptions based on the information that I have, usually what I see. 1,031 in taxes. I took a factor of 2.25. That's what I'm seeing right now for that price range. For 550, I upped it to 1,146 per month. For 575, I don't know why it's low. 1,078, it should be higher. On 600, it's 1,125. I think somehow this factor got messed up when I copied and pasted. So your total payment is 3178, 3445, 3471, 3397. I would say these numbers should be a little higher because our tax basis is a little bit lower here. So this is what I was telling you about. I'm going to upload this to the YouTube, and I'm going to send you the link. You can look at it and give me a call. It is a lot of information. Sometimes it's people have a hard time understanding, please give me a call. That's the whole purpose of me being here. This is what we do best. We really explain and give a lot of options and help our clients make an educated decision as what is the best thing for them to do. In my opinion, mortgage is one of the biggest factors in your financial planning. You should absolutely take it into account because it can make a difference of thousands of dollars in your net worth as well as your cash flow. So in my opinion, it's an investment vehicle, and you should not make this decision uh, very lightly. You should absolutely pick brains of a person like me. So I will give me a call after you've looked at it, and I will love to chat with you. Thank you again.